Mike Franklin is Head of Investment Strategy at Beaufort International,
Okay.
joins me in the studio now. So, speaking to many economists and analysts that are saying that we're already seeing signs of a credit crunch, do you think that the ECB's extra measure to the banks, which many have described as a form of stimulus,
Yeah, sure.
is that going to prevent a Lehman-style event in Europe next year?
Well, we just have to say we hope so. You know, I mean, it's it makes sense to do it this way, probably. I think what we're seeing is a relief rally, definitely. I mean, you know, if you thought this money, cheap money, was going to go into investing for future growth, that would be fantastic. But of course, we're not seeing that. But on the other hand, you don't want these markets and economies to collapse. The other aspect is that the ECB will not take government debt directly.
No.
So this is, again, supporting it that way.
So you think that it will boost demand for European sovereign bonds?
It may well do, but I think the banks then have to decide how much government debt they want. So that's going to be the other question that will come out of this.
What's going to be the biggest headwind facing the banks next year?
I think it's going to be the refinancing. I mean, one of the aspects of these loans is that they're 3-year duration, which is great. I mean, it pushes the debt out there, the profile out there.
But you've got 800 billion euros worth of refinancing coming up next year.
Well, let's be in no doubt. I mean, 2012 is going to be pretty tough, and you know, we're going to lurch from one situation to another. But you know, this is great for the end of the year, and you know, I mean, my own slightly sceptical take on this is that we were talking about the Titanic a few weeks ago when the UK was left on the side, seeing the rest of Europe sail away. I think we're actually looking at the Santa Maria, or is that Santa Mario, who is now doling out the cash before Christmas. So you know, I think there's going to be some headwind, as you say, later on.
Well, I want to run through some of your forecasts then for the first quarter of next year. Let's take a look at that. I want to start with the euro, because you're expecting a rally of around 3% against the pound. When it comes to oil, you're looking at the price easing back by around 10%. And you expect gold to bottom out at about $1,550 an ounce before it starts to recover. Well, let's pick up on gold then. Why you're saying that we're going to bottom out at 1550? What's going to spark a rise? What will the catalyst to that be?
Well, what we're seeing at the moment, I think, is selling pressure coming in connection with the refinancing of the banks in Europe. And you're hearing a lot about, you know, some of the banks and governments having to sell gold at the moment. So it's not clear to what extent that is the case, but there are some strange things going on in the gold market at the moment. But I think we will see some recovery later on in the year.
What will that be fueled by?
Basically, just demand for the precious metal. I mean, there's a lot of buying by people in China and India, for instance. I mean,
so
when those economies start
physical demand will be a greater factor as opposed to
so.
haven demand? Yeah.
I would think so, yeah.
In terms of emerging markets, opportunities there, we've been talking about this one actually all morning. It's an interesting one. You've mentioned Russia and China as two regions to watch. But you also like Mongolia for its resources, the likes of iron ore and coal.
That's right.
I mean, check that out. Year to date, this is the rise that you've got. Why? Just take us through exactly what your reasons are, the rationale behind this.
I mean, it is an emerging economy in the deepest sense, and you know, they've got some amazing natural resources there. They've got Russia and China on the doorstep, and you know, in that situation, you know, it looks very interesting. And there are quite a lot of companies coming to market as well in Mongolia. And
just a quick one, do you see signs that mainstream investors are actually starting to acknowledge this, or are they still heading towards, you know, traditional emerging markets, Russia, China,
I mean,
India?
well, given the way the bigger markets have sold off, I mean, if you get your timing right, you would prefer to be in the more liquid plays, obviously. But, you know, there are going to be funds that will take plays in places like Mongolia. I mean, they're still relatively small at the moment.
But now's the time to get in, you say? Oh,
I think so. I think there's some great opportunities. I think the important thing is people should get on the learning curve, definitely, if they're not already involved in places like Mongolia. So, you know, that's interesting.
Really good to talk to you. Thank you, Mike Franklin, Head of Investment Strategy at Beaufort International.
Merry Christmas.